Welcome.
This is another episode of the Defenders of Business Value podcast, a podcast where we talk about what makes a business valuable, learn the tips and tactics to increase your company's value that only veteran deal makers know. And now, here's your host, Ed Meisogland.
Welcome to another episode of the Defenders of Business Value podcast. I'm your host, Ed Meisogland. I had a real favorable response to my article on the 5 levels of grief in M&A. And so I may or may not have mentioned that I've been writing a book, and in the research, that's one of the things that came out. But also, I thought I would share a couple other tidbits that I've bumped in along the way. So today we're going to talk about risk. And for those of you unfamiliar with business risk as it relates to value in the sale of a company, as risk goes up, value goes down. Okay. That's just risk and reward relationship. You probably remember that from your economics classes in high school and college. And it's the same for business value. And when you're looking at acquiring companies, this is all about risk, earnings, risk, and growth. That's all I spend my life in this sale world. That's all I do is try to evaluate where's the business going, what kind of earnings does it have, and what kind of risk is inherent to the company. So today I'm going to talk to you about 65 different types of risks that are in a business. And I want to give attribution to a woman by the name of Anna Marr. I can't find her. I can't find any reference to her. I dug this 65 components of risk out. It's probably at least 3 to 5 years old, but I can't find her. Can't find her on LinkedIn, Twitter, or any of the socials. So, but I do have a note that this is some of her work. So I added my own, but nevertheless, I wanted to kind of go through these 65 attributes of risk in a business. So the first group is strategic risk. So the first one is corporate governance risk. And that means that employees won't act in the best interests of the owners or the stockholders. And so when you buy a company, I mean, that's one of the primary risks is everybody going to hop on board with the new owners? So that's the first one. Competitive risk. It's the general risk that you're going to lose to competition. Everybody, and when we write our marketing information, that's what we spend a lot of time doing is identifying, where, if you look at the grand scheme of things versus the business and its industry, locally, nationally, how is competition going to affect the company that you're buying? Innovation, innovation risk is that competition or new entrants will outdo you. And when we think of that, competition is really innovation. I think you're seeing a lot of buyers that are buying businesses that have not necessarily kept up with the times as far as technology and equipment, and then they can retool it and really go out and compete. But innovation risk is serious when you're evaluating a business. That are you at a technological disadvantage? Intellectual property. All right. Intellectual property risk is, and when we're talking about intellectual property, we're talking domains, we're talking IP, we're talking processes. All that is intellectual property. So, do your competitors or other people get a hold of that intellectual property, or is it impaired in some ways somehow? And we're seeing like AI is really doing a number on businesses right now because everybody doesn't know, how is that going to affect their IP? So M&A risk, so mergers and acquisition risk, it's the risk associated with integrating companies. And I think we've talked about this on the podcast before. We're talking about, when you buy a company, company buying a company, can you can culturally, operationally, and financially does this work? Financially, we can make it, we make the numbers work. But there was a study by, I believe it was the Harvard Business Review, in which 87% of mergers fail. And the biggest risk the biggest problem is culture. So M&A risk is certainly something to think about. The rough rule of thumb that we have always, I shouldn't say we have always, but that we find, and John Worlow from Built to Sell, we talked about this many times over the years, is that a company needs to be, the acquiring company needs to be roughly 5 times larger than its target. And the reason being is that it diversifies the risk. That, if things don't go as planned, then they don't go as planned. And certainly we take it on the chin, but we don't capsize our business. All right. So next, business risk. It's just the overall, risk that the business you have will not be effective, might not be, accepted by the marketplace. Economic risk. That's the risk that, the prevailing economic conditions, kind of like today, that we'll go into a recession. For some businesses, that'll benefit, but for other businesses, it's, cost of capital and things like that. The economic risk is considerable. Technological change, that's a risk that technology investments will be obsolete. And as you're seeing, as things are rolling out, technology that is, you're seeing that, let's just take the pandemic. You look at Zoom, and it was a big land grab to get into virtual meetings. Well, now that the pandemic's out, you've got technological change and you've got a lot of new entrants into the market. So that's a risk. Project risk. That's a risk that, some of your undertakings aren't going to come to fruition. Ethics risk. The integrity of the company is the mission and the people that are guiding the company. That's the risk that, there's an ethics breach. Reputational risk. That's the risk that you damage your corporate image. Reputational risk can reduce the trust in your business and ultimately, damage value. And I think you see, certainly when you read the news, you find that, business owners, somebody will have been a bad boy or girl and it makes the newspaper. And as a result, the business, takes it on the chin because of the sins of the owner. All right. Now we move into financial risk. So profit risk, that's the general risk that you're not going to be profitable. That's just inherent with business. Capital availability, we're bumping into that now. I say we're bumping into that now. The cost of capital is causing some havoc in small business, but deals are still getting done. But capital, it's the availability of it. A lot of businesses can't grow without access to lines of credit and growth capital. I will tell you, as of today, and we're talking late September, that businesses, especially if you are in the, let's just say, I'll say HVAC. Let's pick on, you're a plumber. And you're a plumber and you want to grow your business through acquisition. If you are buying a company that is in the same industry, so another plumber, and this is based on your NAICS code or NAICS code, I guess some people pronounce it, the SBA will fund that acquisition with no equity out of your pocket. So the money will be expensive, so that your cost of capital is, high as, prime and maybe prime plus 1 or 2, depending on the bank you go with. But you can grow through acquisition without any kind of capital expenditure on your part. So keep that in mind. All right. The next one we're talking about is asset risk. some businesses are asset heavy, and what is the risk associated with those businesses that are able to keep the value of those assets good? Like, for example, like real estate. When real estate values fall, that's a risk to the business, because you don't necessarily have that level of collateral that you once did. We just talked about cost of capital, so interest rate. Interest rates cause havoc, right now, and I don't see that coming down. For those of you that do, that have, business with foreign countries, certainly the currency risk is to be considered. We have inflation, the risk of price increases in critical inputs like energy, and for the transportation industry is a real good example. Investment risk. This is the risk of the change in value of investments. Yeah, it depends. Those are predominantly for bigger businesses that do investing on behalf of their company. Liquidity risk. This is a huge one for small businesses, because when we start talking about liquidity, it's what's the likelihood you can sell your business? The rough rule of thumb from an industry standpoint. And again, it just depends on the type of business. But as an industry as a whole, your success ratio is only running about 20 to 30% success ratio of selling your business. Now, I can tell you that in our shop, we're higher than that. We're in the, depending on the type of business, like manufacturing, you're probably 70, 80%. Your small retail, it's probably in that 20 to 30%. It just depends. But liquidity is a big thing. So let's talk about systematic risk. That's next. The risk that the whole global financial system of a country will collapse. If you're doing international work, that's one thing. Here, small businesses, probably not going to be a risk to you. Concentration risk. When we talk about concentration, it's the dependency of a customer, an employee, a supplier. That's a big problem for any buyer, because if you're concentrated there, if there's a concentration, that means that there is higher risk if that person, place, or thing goes away. Credit risk. That's we're seeing. I don't want to say we're seeing. Let's just say it from this standpoint that with the amount of capital and the velocity of capital that was available in the last 2 or 3 years, there's a lot of people that borrowed a lot of money, and for those that are on variable debt, it's gotten pretty serious for them. So there's a credit risk that the borrower will default on a loan. Fraud risk. Always, I've got some friends that do fraud work. The forensic accounting. There's all that goes on. And there's that risk. Accounting risk. Knock on wood, we haven't had it, but you botch up accounting. I can tell you that my accountant spends a fair amount of time after at the end of the year fixing my QuickBooks sins. So but there's that risk of accounting and money in and money out. And I will tell you that that's a big one from a business sales standpoint, because what we're talking about is you have to be in a position to be able to explain, here's my tax return. My tax return ties to my financial statement. My financial statement ties to my internal bookkeeping. My internal bookkeeping ties to my deposits and ties to my invoices. That's how accounting is so important. Fiduciary. Let's move fiduciary breach risk. If the risk that your firm, will breach those fiduciary responsibilities you have with your client. Next, let's move into marketing. So marketing and sales risk. So certainly revenue shortfalls that your marketing plan does not work as anticipated. The demand, you overestimate how much people will want your product or service. Market competition, the risk that we're like, let's just talk pay-per-click, the cost to advertise on Google. There's in my world, there's all kinds of people, looking to drive up the cost to be seen on Google. And, they're not in our neighborhood. These are people that are all across the country that are out trying to, outmarket us in our own market. All right. So next, the sales forecast risk. That's a risk that clearly, but that means that you're going to make some forecasts and they don't come to fruition. New product. You introduce a new product and it falls flat. That's just that you underestimated perhaps the total addressable market. It doesn't come to pass that the market is interested in it. That's a real thing. Customer relationship risk. Everybody waves the flag on relationships, but it seems as though we're getting further and further away. We're doing more things on email and text rather than belly to belly work. So we're seeing it's hard to get a relationship in that manner. But people are doing different things. But my point is that the relationship that you maintain with your customer or your clients, your customers, clients, employees, vendors, that is a risk. You have brand value, the risk of brand awareness, publicity risk. We were just talking about that up in strategy, where you have an issue with the sins of the owner will affect the brand. And, right now, let's just talk about, let's move to football. You have Chicago Bears defensive coordinator that the FBI raided his house. Well, that affects the brand of the Bears, because it's like, what are you associating with this kind of guy for? So that's an example. Publicity risk, the risk of bad publicity. Certainly the Bears are on high alert there. Large account. Again, large account risk. We're looking at, you have concentration of any kind is bad. So let's move into operational risks. So infrastructure. These are, the things that run your business. And the risk of those things going out. Like, for example, let's take our business. We need electricity to run computers and phones. That's it. That's what we use. So it goes down, we've got problems. So maintenance risk, the risk of maintenance failure, like for example, aircraft, the human error in aircraft maintenance. That's a bad day. Product failure, the risk that the product or service will fail. Product liability, I don't think that needs any explanation. It's just there's a defect in your product, and something happens and there's a liability that's associated with it. So then we move into operational quality. This is the general risk of operating your business failures. For example, like we use our website, for example. If it goes down, are we out of business? No, but it's hard for us to connect with the people that are expecting to be able to see all of our deals. So that's a operational quality risk. So production shortfalls, let's just say like Ford, for example. You had Ford that was unable to get their chips. So the supply chain issues, that is a risk. So they failed to meet the production targets. Let's move to logistics. The logistics risk is that you're unable to deliver your wares, your goods and services to your customers. Procurement. Again, back to the chip example. This is a matter of you're unable to get what you need in order to provide your product or service. So now let's move into information technology, or IT. So architecture risk, the risk that what you've built won't work or will fail to meet the business objectives. Data quality. Where I had Mike Butler from C-Spring on the podcast a few months back, and we talked about data quality. So if you have poor data, you're going to make bad decisions. Technology quality. What is the software and hardware you use? Like, for example, I have a friend that doesn't update his computer. Don't know why. It just, when it breaks, then all of a sudden we have to jump in and fix all of those problems. So data quality risk is a real thing, especially for those that didn't necessarily grow up using computers. So the platform risk, like I have a marketplace platform, and I'm just working right now to try to figure out product market fit. Does the platform work to serve the people I'm trying to serve? I don't know. We'll see. Information security risk. Cybersecurity is a big thing right now. I don't think it needs a whole lot of discussion. It's just, how locked down is the information that you hold. All right, moving on to HR. Workplace safety. Again, the risk of accidents or poor environment impacts employees. And if it impacts employees, you got to keep them because it's too hard to hire these days. So employer reputational risk. You got outfits like Glassdoor that reviews, exiting employees and, what kind of experience that they had working for you. It's hard to unwind disgruntled employees. Employer liability risk. It's the risk that, your business practices will get you in trouble by the people that work for you. Employment law compliance, the risk of non-compliance with employment related laws and regulations. Believe it or not, there's a lot of people that do not follow the law. And in fact, it's one of the when you sell a company, that's one of the things that you have to represent and warrant that you're doing is adhering to the laws. Talent management risk. It's the risk of losing, A players, and it happens a lot. Compensation and benefit risk. We're seeing that in let's talk HVAC. I mean, it's just a race to the top to get that talent. And you're seeing people poach a lot of higher end talent from other companies just for a couple dollars difference. You see that in home health care a lot. Like people the nurses will jump for 25 cents an hour. I mean, when I say nurses, I'm talking like CNAs and things like that. Hiring risk. Everybody, I think it's Zappos that will pay you $1,000 if you leave. All right. Rather than take the job. And that's, the risk that you will hire the wrong candidate because Zappos recognizes that you make that kind of mistake. It's, the cost associated with the mistake is far more than the $1,000 it is to say, this isn't for you. And then employee policy privacy risk. It's the prospect that you will, the risk that you will leak personal information. That employee will leak personal information, related to the company. Then you've got compliance and legal risk. So certainly compliance risk. Are you complying with the laws that govern your company? Mandatory reporting risk. You got to file your tax returns, for example, is a good one. And I will just tell you that if you don't file your tax returns, you're probably not going to be able to sell your business. Next is liability risk, the risk of lawsuits. We're in a crazy litigious time where, people are quick to file suit. All right, now let's move to catastrophic risk. So force majeure, acts of nature, crazy things happen. You look at, the flooding and earthquakes and fires, those are all real things that affect business. Pandemics are another good thing that negatively affect businesses. And then lastly, we're coming up to an election year, political risk, depending on who's who and who's driving the bus, at a national as well as state level, affects business. So those are the 65 business risks that can affect the value and the saleability of a business. I hope you enjoyed this episode, and I'll see you next week.
This was another episode of the Defenders of Business Value podcast. For more episodes packed with strategies to increase the value of your business, visit defendersofbusinessvalue.com for show notes, transcripts, and free tools to start you on your journey. Subscribe now so you don't miss any future episodes.